All right. Well, stay on. We do have an analyst joining us who tracks HDFC Bank very closely. So let's get her on board. Kajal Gandhi of ICICIdirect is with us. Kajal, good numbers coming through. Asset quality trends are benign. And, continuous growth in deposits of 20%. Very good increase in branch count as well. The only question now is that does it narrow its valuation gap between its peers? What's your own analysis of how to approach HDFC Bank?
So considering this result, they have posted strong numbers, as you also mentioned. And what we need to see is that whether they are able to improve now onto the CASA also, because the growth in deposits is good, and I think they are doing it for a couple of reasons. One is their own growth, as well as with merger into HDFC Limited, they will need more deposits and replacement of borrowing. So I believe deposit growth will be continued. We will need to see how much it impacts currently on CASA and the growth on CASA for the future. So thereby margins will also need to be seen accordingly. And second thing, I think when we are talking about valuations, they have already reduced a lot over time. With HDFC Limited merger, I think the post-merger numbers are looking valuation-wise less than around 2.1 times forward on FY25 basis, so which is also quite cheap. So I think definitely there is scope for post-merger also multiples going up. We should see, I think, a 2.4 to 2.5 times on the bank post-merger, and then the subsidiaries adding up. So I think valuations have a good gap, and they should gradually start narrowing. Couple of maybe more approvals which we are waiting from the regulators, the NCLT and the RBI, couple of things which we are waiting. I think those are the only things which have held that.
Yeah. Kajal, margins were kind of flattish. Provisions dropped, and, earnings looked up. I mean, the numbers themselves are, I think the corporate book was down a little bit. The numbers themselves, no problems at all, right, Kajal?
Yeah, no problems. I think people would have expected with the sharp rise in the NII that was seen, because NII growth has beaten expectations across for even after the IT refund thing. So there may be some expectation on I think the NIMs should have marginally gone higher, but I think they haven't gone up. So we should think that once the liabilities reprices, they won't fall also. So they are, I think, building in stability of margins, which should be, I think, read from this.
So you said that the multiples can go up further post the merger. I mean, post everything coming through. Would you raise your earnings estimate and target price on HDFC Bank post these numbers?
So yeah, possibility is there. We have also even raised in this, considering these factors only, that the numbers have continuously now last 3-4 quarters giving strong indications that there are no concerns on the growth front. So I think currently also we have raised the target from 1750 to around 1920, valuing around 2.7 times. Post-merger also we believe we will value around 2.4 to 2.5 times, and if the stock further rallies, there will be hope, yes, for further upsides.
Okay, all right. Thanks a lot, Kajal, for stopping by and giving us that quick analysis on HDFC Bank. Going by the analysis and the broad feedback that we've got, that stock should be opening up well in the green today. Well, from banks to tech, Wipro